All right, everyone, welcome back to Ryan Miller Trading Economics Framework Part 2, where we're going to talk about the technicals. If you haven't seen Part 1, go check it out. It's on the fundamentals, um, but today is on the technicals. I'm going to try to make it as quick and painless as possible. I know the framework stuff isn't much fun, but once we get through this, Part 3 will be a little more fun. I'll show you a quick example of how we combine the two. And then we'll get into the actual breakdowns of different asset classes, how we can try to take advantage of moves and figure out what's happening in the markets. Okay, let's get going. Okay, so the technicals, I'm going to show you some very basic market structure. Okay, that I keep it very simple. I don't get into channels and trend lines and indicators and Elliott wave and all that other kind of stuff. Not to say that it doesn't work, because it does. Everything works in the right context. Yeah, but I just try to keep it as simple as possible. So since we're going to be analyzing macro, I'm going to be using higher time frames. I'm going to try to stick to 2 time frames mostly to keep it very simple. The weekly, most of our analysis will be done on the weekly. We're going to use the daily uh, to kind of refine, see what's happening underneath the surface, underneath the weekly, possibly get into entries on the daily, possibly drop down to the 4 hour at the lowest time frame, and the monthly will be our highest one that we look at, but I'll try to stick to the weekly, daily with most of our analysis on the weekly. Okay, so we're going to look at basic market structure. As we know, the market doesn't move in a straight line. It moves up, down, up, down. There's buyers and sellers, right, that are battling out. They create these big inflection points in the market. And that's what we're going to analyze right now. So, sorry, bear with me for one moment. Okay, let's get rid of this. Okay, so when we're looking at market structure, we really want to look for clear trends, uptrend, downtrends. When is the trend changing? So that's what we're going to get into. So the market, it moves up, moves down, moves up, right? It pulls back, moves up, moves down, pulls back, moves down, pulls back. Now, here in this example of an uptrend, we have a low, a high, and price pulled back, and it formed a higher low. It's a higher low because it's higher than this low. Then it moved up, broke this high, forming a higher high. That's an established uptrend. Low, high, higher low, higher high. Very simple. In a downtrend, we have a high, a low, a lower high, right? Because it's higher, lower than this high. Moves down, breaks this low, creates a lower low. That's an established downtrend. High, low, lower high, lower low. Okay, this is what is called major structure. These big moves in the market, these big swings in the market, it's called major structure. So anytime you get a big swing like this or a big pivot, you can call it a swing high or a pivot high. This would be a swing low or a pivot low. This is major structure. Okay, major structure. And within that major structure, we have what's called minor structure. Minor structure is these smaller movements, right? The smaller fluctuations within the major structure. And you see it in uptrends and you see it in downtrends, right? It's the smaller fluctuations that happen within the major structure. Okay, so the idea here, very simple. For, let's say we're in an uptrend, price creates this high, this higher low, breaks this high, creates a higher high. What we're looking for is a pullback to this structure, right? A pullback for us to then get long, because this is where the buyers overtook the sellers. There were sellers here, they stepped in to push the market down. Buyers overtook them by creating a higher high, but breaking this high, creating a higher high. So within this swing high and this swing low are where the buyers are going to be. So once price breaks up, we're looking for a pullback, so then we can get long and continue the, and if the market, assuming the market continues its uptrend, we're looking to join that move. Same on the downtrend. Okay, we get high, low, lower high. We get this lower low because it breaks this low. We're looking to pull back for a pullback to the structure. It has to be within here. right? Because if it breaks this lower high, well, then we have a potential trend change, which we're going to talk about in just a second. So we get a pullback within this structure, right, within this range, and we're looking to get short and take price down. Very simple, right? Obviously, a lot more goes into it, and we'll get into more detail in the videos themselves. But that's what we're looking for. The major look for these major swings in the market, established trends. We're looking for pullbacks to the structure. These structural lows that were broken to take it short, and pullbacks to these structural highs that were broken and take it long. Very simple. Now, how do we know when a trend changed? Okay. So in this example here, we had an established uptrend, right? Low, high, higher, low, higher, high, higher, low, higher, high. Right? The established uptrend. Then we had this move down that broke this swing low, this pivot low. Right there, price, boom, broke this low. Some consider this a trend, right? You have a high and now a low. Some consider that a trend. For me, that's a bit aggressive. What I look for an established trend, again, is the high, the low, lower high, lower low. But once we get this move, anytime structure is broken, we expect a pullback. So we get the pullback here, and what we're anticipating at this point is this lower high now forming to join this big move that came into the market to the downside. So we got this big move, high, low. We get the pullback to structure, and we're anticipating this lower high forming to then take it down to then create a lower low, and then we have our established downtrend. Same thing on the other side. We have a downtrend, right? We have a high, low, lower high, lower low, lower high, lower low. Establish a downtrend, and we have this move up. This move up breaks this pivot high, this swing high. Now we have a potential trend change. We're waiting for a pullback to structure. This is where the high was broken, so we're waiting for a pullback within that, and then we're looking to get long, anticipating this higher low forming and eventually creating this higher high, and that's a trend change. Very simple. Now, how we're going to actually trade these things, we'll get more detail in our actual video breakdowns of different assets. But anytime we get pullbacks to structure, when we're looking to get long, we're going to be looking for demand, and then pullbacks to structure when we're looking to short, looking for pullbacks to supply. Now, some of you might not look at supply and demand. You might look at support resistance or use some type of minor or major structure together. It's all the same. Right? It's just different perspectives, so it really doesn't matter what you use, right? And in this case, right, we're in a downtrend, waiting for the pullback to structure, looking for supply for us to then get short. We're in an uptrend, looking for a pullback to this structure where this high was broken, looking for demand for us to then get long. It really is that simple. Now, obviously, a lot more goes into it, a lot more depth, which we'll get into in the videos, but it is that simple. Now, we'll also be using multiple time frames, and that'll come into play as well, right? So let's say we're in an uptrend, right? Within these pullbacks, let's say we're on the weekly time frame, right? Which we're looking at right now, right? We're on a weekly time frame. Within these pullbacks on a lower time frame, there's going to be a trend, okay? So each time you get a pullback, it just shows up as a pullback on a higher time frame, but on a lower time frame, it's going to show up as a trend. Okay, that's where it can get tricky for some people. So let's say we're in this uptrend here on gold. Doesn't matter what we're looking at, but I happen to be looking at gold right now. Okay, we're in this established uptrend. Low, high, higher low, higher high, and so on and so forth. Within these pullbacks, right, you can see these small fluctuations. That's your minor structure. Here's your major structure. These small fluctuations in here, that's your minor structure. Within these pullbacks on a lower time frame, let's just highlight this area. If we drop down to a daily, we should likely going to find a downtrend. All right, not always, but it's likely. Okay, and here we go. We had this is the daily, we had this low. We had this low, this high, higher low, higher high, and then boom, price breaks the structure down right there. Let's get rid of some of this so we can see it a lot easier. We had this higher low formed, created this higher high, and then boom, price breaks structure down. It breaks this swing low, this pivot low down. Now we have potential trend change. Now we're waiting for a pullback. We get a pullback, looking for an area of supply to go short, anticipating this higher low forming, and then boom, it goes short and it creates a lower low. Now we have an established downtrend on the daily. High, low, lower high, lower low. If you can't see it, high, low, lower high, lower low. Now, the tricky part is this is all within the context of this big move on the weekly. So we're still within a weekly uptrend, right? As long as price doesn't break this pivot, this swing low right here, price can pull back as far back as here. As long as it doesn't break here, from a weekly perspective, we're still in an uptrend, right? And the higher up on the time frame you go, the more powerful it is. So we have a daily downtrend, but we're in a weekly uptrend. So we know that that daily downtrend is likely to end at some point, right? That's what we'd be anticipating. So you can short this. You just got to know that at some point it's going to end. And the closer you get to structure, where those on the weekly, where that high was broken, the closer you get there, well, the riskier it becomes, because that's when the buyers are going to step in. In this case, it didn't pull back anywhere near that structure. That's the way it goes sometimes. Okay, but we have this daily downtrend. And then what we're going to look for to find clues when this downtrend on the daily is going to end and price is going to rejoin the weekly uptrend is we're going to look for, just like in our example right here, we're going to look for a swing high to be broken, right? That's what we're going to look for. Swing high to be broken. Okay. And that's what we get. So here, this white line is our weekly uptrend, right? And right here, price breaks. Sorry, get rid of some of these lines. Price breaks this pivot high. Okay, this is a strong pivot high because it created a low. Price breaks this pivot high right in the close of this candle here. So now we know, okay, price just broke a pivot on the daily, and it's likely that we now have the higher low has now formed. Since prices just broke a swing high back in the direction of the weekly trend, we know that this is likely now the higher low, and the weekly is going to continue up. And sure enough, it did. It continued up, broke this high here, created a higher high, and on we went. Okay, so that's where it can get tricky with the multiple time frames. I hope that made sense. I know I talk a little fast, but we're going to do this over and over in the videos. So that's pretty much it, right? As far as what we're looking for market structure. Like I said, more goes into it, but we're going to keep it very simple here. Everything we do is going to be simple. Okay, I'm going to keep it as fundamentally simple as possible, as technically simple as possible. Okay. So if you want to just take a look at that one last time, those are uptrends, our downtrends, our potential or our trend changes, right? Looking for pullbacks to structure, to get long, to get short, right? Depending on the situation. And that's pretty much it for the market structure. One last thing I want to show you, another minute. I mentioned when price pulls back to this structure where we broke the low, we're going to look for supply to get short. In this case, look for demand to get long. How I identify supply and demand, just show you a picture real quick. This kind of highlights it pretty well. So there's two demand levels here, two supply levels. So for demand, this top left here, we had this move up and then price kind of stalled. Oftentimes you get these smaller candles. A lot of times they have wicks. It's kind of the buyers, sellers battling it out, and the buyers took over. They broke the high here. It was an imbalance of supply and demand, right? Buyers and sellers are battling it out. Buyers won. Now we know price pulls back. There's likely buyers there. They're going to kick back in, looking to take it long. Same thing here. Same situation, but on the sell side, supply. battle here. Sellers won, looking for pullback supply, take it short. Back to demand, price pulled down or pushed down. We had this battle between buyers and sellers. Buyers won, looking for price to pull back to this area of demand, go long. In this example, price pushed up, sellers stepped in, there was a battle, sellers took over, looking for price to pull back to then get to the supply to then go short. Very simple, right? So these are the four main types of supply and demand levels I look for and what they look like on a chart. Like right here, here's a level here. We had that move in. Buyers and sellers kind of battling out these smaller candles. Buyer took over, right? That's a demand level, right? Here's supply level. Move down, a little basing, and then boom, sellers took over, right? And then here we have supply level. Now you notice there's no small candle in between these two, right? Sometimes you're going to see that. So this is another type of level I look for. So this is this, except it's on a, happens to be on a smaller time frame. So we have this highlighted here. So if we were to drop down to, we're on a daily, let's drop lower so we can see it to a 4 hour. Oh, I have to go back. There it is. Let's see. You got to move up. You have some basing, smaller candles, buyers, sellers battling it out, and then we push down. Right? So that looks like this. Right? So that's how we know that's supply. And then you'd find the same thing, same situation on the other side with demand. Right? These candles, these bigger candles that are right next to each other with no small candles in between, they look like this. Right? On smaller time frames. And then one last one I need to show you. Is right here. These kind of wick over wicks. See how we have this wick behind the candle, right? And then a wick in front of it right here. This, we're on the weekly right now. This is going to look like this on a smaller time frame. So if we drop to a daily, there you go. Move down, basing, smaller candles, buyers, sellers battling out. Buyers broke, sellers took over. They broke the low. That's a supply level. We look for price to pull back into the supply. Sellers step in to then take it short, right? It's very simple. And then you'd find the same thing if you found, this is a smaller one here, but this area right there, we drop to a daily. There you go. Move in. Buyer, sellers try to step in. Buyers push up, break the high. That's a demand level. Look for price to pull back to get long. Right? So again, when you see those types of levels without the small candles in between, drop to a low time frame, you'll find them. When you see those wicks against each other, one in front of the wall, one behind, drop to a smaller time frame, you're going to find these formations. Those are some basic supply and demand levels I look for, and we're going to use those to get in and out of trades in the context of the market structure that we just went over a couple of minutes ago. Okay. So that is about it as far as market structure and supply and demand is concerned. Give you one last look at that. I hope that made sense. Again, a lot more that goes into it. We'll go in a lot more depth in the videos. In the next video, which should be even shorter than this one, part 3, going to combine the fundamentals and the technicals. Just show you very briefly how do we know when the technicals are in line with the fundamentals? How do we know when they're not? And what do we look for? Right? What are we looking for on the charts here to trade price in line with the fundamentals? Right? It's going to be very simple, just like this was. Very simple. All right. I hope you enjoyed. If you have any questions, let me know. Shoot me a comment. Like I said, find me on Twitter. Message me. Make sure you like, subscribe. And I will catch you in the next one in part 3.